Hello, investors. It's Don Vandenbord, Chief Chief Information Officer and Senior Portfolio Manager with Revere Asset Management. Today is Friday, July 23rd, and I am coming to you from St. Augustine Beach, Florida, with the big show, the Friday expanded edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at what you need to know for next week, dive into the leading and lagging sectors, and update the world famous 21 over 21 leaders list. State of the market. We are back to an uptrend, and if you take a look down at what just happened, very strong week for leaders, and that's really the basis of our investing thesis here. We take a look at the market, we take a look at the broad sectors, then we take a look at the individual industry groups and sectors, and then we look for the best stocks in there, and we gauge the overall health of the market on how the leading issues are doing. And if you can't make money in the leading stocks, you're not going to make money in the market. And we basically had a goal line stand on Monday. That was the final shakeout. Leaders held up well while the indices were down a lot on COVID fears. But that was the line in the sand. We had a very, very strong Tuesday, Wednesday, Thursday, Friday. So a great close to the week, especially in leadership type names. And that's what put us back to uptrend. Now you'll notice I've got some red here. The Qs are back to being extended after coming off of extended. It didn't take long. A four-day very strong rally in the NASDAQ 100 got us back to 6.7% above the 50-day moving average, so that's extended. And then on the other hand, you've got weakness in small and mid caps, and that's what constitutes the yellow arrows here pointing towards neutral. So while we're in an uptrend, very strong leaders, the major big cap indexes are above their short-term 21-day, medium-term 50-day, and long-term 200-day moving average. There are some things to be concerned about, both from a weakness standpoint and an overly bullish standpoint, and we'll dive into that as we go through the chart. So echoing what just happened, very strong week for leaders. You can see the strong close for the week. S&P up 1%, NASDAQ 100 up 1.2, Dow up 0.7, mid-caps up 0.9, Russell up 0.5. So really what happened is after the market close, really strong earnings report from Snapchat and Twitter lit off a huge rally in anything that had to do with digital advertising. And when you've got big stocks like Google and Facebook that dominate the top end of the not only the S&P 500, but of course the NASDAQ 100, and really lit a fire under those, and they trickled over to other stocks like Pinterest, Etsy, Trade Desk, Roku. Really just a strong day for leaders and for the market, and a great way to end the week. We had a lot of outperformance in-house this week, and we update our stops, move them up as accounts move higher. Our downsides may be about between 5 and 6%, and we're booking gains, keeping an eye on what's going on with the leadership, and you're really going to be it's really eye-opening how you can see about how they say things are darkest before the dawn. We were on the edge, but the close on Monday of down to about 2% before we get stopped out on everything. But as I said, strong 4-day rally. That's where we are. Wouldn't be surprised to see a little pullback in the NASDAQ 100. But on the other hand, we've got huge earnings reports next week from the likes of Tesla, Apple, Amazon, Microsoft, Google. So maybe those were front run with the move up today based on the Snapchat and Twitter results. maybe not. We'll see what the numbers are, and then we'll see, more importantly, how the market reacts to it. That's most important. If you'll recall, last earnings cycle, Apple just and Amazon just blew the cover off the ball and knocked the cover off the ball in their earnings report, and they were sold off as a result of that. So it depends on what the market is feeling and how those stocks are going to react. So it's not the numbers themselves, it's the reaction, and very often the guidance is what is most important there. So before we go on, let's take a look at the guys running the show here at Revere Asset Management, America's fiduciary. Dan Stewart, he's our president, chief compliance officer. Tim is our chief strategist in charge of short-term signals, and Hunter and Alex are our research and beta portfolio managers, and they are constantly feeding me information as the senior portfolio manager, the guy that makes the decisions for the portfolios. And I'm just so happy to be in the situation I'm in, and really happy when the plan that we lay out works well, as it did, by not getting our emotions in the way, but by sticking to the data that's coming from the market. And that's why Monday was such a key day, as despite the fact that the indexes looked terrible, under the hood, leaders were acting well. That led us to stick with what was going on in the market, and we were certainly rewarded Tuesday through Friday. So let's get to the charts. We'll start off here with the S&P 500. Let me blow this up a little bit. So you can see here, one thing we had been talking about is how 4 out of 5 days, going back a week and a half, we end up closing at or near the bottom of the range. That's not really healthy. That's not what you want to see in a market. You want to see a weaker open and a strong close. Well, we certainly got that strong close over the last 4 days, as you can see, closing at the top of the range and actually to all-time highs. So tough day last Friday, bad day on Monday, but we held right where we needed to at the 50-day moving average. Next day, Tuesday, a small gap up, but just strength throughout the day, reclaiming the 21, and then following it up with a follow-through strength on Wednesday, Thursday, and Friday to close the week. And if you look at a weekly chart, this is a bullish outside positive reversal. Bouncing off, this red line is the 10-week, which is the equivalent of the 50 days. So you can see we undercut last week, undercut the lows, in fact, of the prior 3 weeks, but closed above the highs of the prior 3 weeks, and that's very bullish for the market and for leading stocks. Next up, the NASDAQ 100. Same situation here. You can see closing near the bottom of the range 4 out of 5 days, but the NASDAQ didn't close at the low on Monday. It closed near the high, just below the 21, reclaimed it with a gap up, and closed the last 4 days to all-time highs. Again, looking at the weekly, an outside bullish reversal, closing at all-time highs. Gotta love to see that. Let's go to the Dow. A little bit of a lack of relative strength here on the Dow, if you can see the relative strength line here, but same situation. Dow had a really bad day on Monday, but recouped all of those losses and then some to close at the top of this range. So see if the Dow can follow through to all-time highs next week. Now let's get to mid caps. Same situation, weakness Thursday, Friday, but not a good day on Thursday, as there was weakness in oils and banks. Whenever you have weakness in oils and banks, you're usually going to see mid caps and small caps underperform. Same situation today. We had underperformance with the XLF and outright losses in oil, so not able to fully get through the top of the recent range, but we're into the 21, and that's a start. And if oil and banks start participating, we'll keep an eye out for where that takes us. Here's the IWM, really the same situation. Straight down, bounce near the 200-day on Monday. Nice day on Tuesday and Wednesday. Some weakness on Thursday, again due to oil and banks, and underperformance today, again due to underperformance on oil and banks. And look at the relative strength over the last 4 weeks in small caps, just not what you want to see. So that's what takes us back to having the uptrend for large cap growth type stocks, but some caution with the NASDAQ 100 as it's a bit too extended, and small caps lagging. So it's still a bifurcated market, but when you're at all-time highs, you certainly can't say you're in a correction. Maybe bifurcation was another way to put it, but by splitting it up into uptrend and then the caution for being extended on the NASDAQ and the weakness in small stocks, really that's just saying stay away from oils and banks, and we'll go through the sectors here momentarily. So that's where we stand with the major indexes. So let's go to the strength or lack of strength. I'm going to go through these as always in alphabetical order, XLB starting with basic materials. So what we're looking for in these is what did the relative strength line do this week? And where are we relative to the 21 and the 50-day moving average? This is what tells us where the high level strength or weakness is. In this case, basic materials. So really, this is telling us we really don't want to own copper, steel, aluminum, stocks like that, chemicals, because overall the sector is weak. And the only entry that we have on the 21 over 21 list is ALB. The only other stock that I can find that's really strong is TX in that sector. But until this improves, and of course we've got alerts set all throughout those sectors, but for example, FCX just had a great earnings report, glowing reviews by the CEO, bounced off the 200-day moving average. This may be where money flows next if we need to take a break with tech. But the first thing we want to see, you'll see the alert that I have set here, is to get back above the 8 and the 21-day moving average. But for now, this was probably a very low risk entry in a beaten down group. But really, that's not the game we play here at Revere. So that's XLB. Up next is Energy, XLE. Energy also extremely weak. Look at the relative strength over the last 5-6 weeks, just continuing to the downside. A little bit of a bounce midweek, but can't even get above the 8 EMA, let alone the 21 EMA. So if you find a nice chart on energy, let me know. If it's liquid, I'm going to put it at the top of my list. But for now, this just looks awful. Maybe if this COVID Delta, if these issues pass, that might give a bounce to this sector, and maybe some things that are near the top on a relative strength. Those will be the first things that we'll be looking to go into. One of the better charts is COP, but still under the 50 and the 21. Okay, next sector, let's go to XLC. This really got a big pop today because Facebook and Google are in here, and big move up to all-time highs. This looks a lot like the NASDAQ 100, bouncing at the low on Monday and then following through Tuesday through Friday to the upside. One stock that was in here that got kicked out of the 21 over 21 list is T-Mobile. Had been in it for quite a long time, but some selling late last week and early this week. They've got earnings in 6 days, and the 21 has rolled over, and we closed, although above the 50, below the 21, so it came off the list. Next up is financials. Some of the bigger banks are doing okay. Morgan Stanley, for instance, not really a bank, more of an investment company, but actually broke out this week before reversing today. And also Goldman Sachs looking pretty good. But as far as the banks go, XLF, this is not good. Let's go more particularly to banks by looking at KRE, and that's really real weakness in the financials. So there a lot of the finance management companies look fine. For example, BX in this sector. Look at that. That's, you wouldn't even think that's in XLF, but XLF overall and the big banks, KBE, also showing weakness, but bouncing at the 200-day, can't get through the 21. So no financials in the 21 over 21 list. Next up is industrials, XLI. Not a bad week for industrials. Strength in the beginning of the week, on a relative basis, weakness the last couple of days as tech really took over, but back above the 21 and back above the 50 is a start. So industrials looking not bad. Generac is really my favorite sector, or my favorite stock in here, but it just hit its pivot plus 20 to 25%. Maybe can form a 3 weeks tight for an alternate add point. But for now, no industrials in the 21 over 21 list either. Next up, XLK, and I think you know what to expect here. Bounce at the 21, 4 straight up days to all-time highs, massive relative strength over the last 5 to 6 weeks in tech, and that's really the pond that we've been fishing in. Next up, XLP, strong day today, a lot of weakness earlier in the week, but it did bounce at the 50 and the 21 and is still at the top of this base that it's forming. My favorite stock in here is Costco, but also we've had Pepsi had a nice breakout on earnings late last week. Real estate, XLRE, is up next, and this is holding up very well. We've talked for quite a while about how private equity is getting into buying and renting houses. That's certainly propping up the residential real estate market. And there are a lot of different industries that are classified as REITs, but really aren't traditional REITs. And my favorite is AMT. Alex talked about this earlier in the week, and this has been in the 21-21 list for quite a while. But this is a cell tower company, and trending very nicely higher, showing some good relative strength. Next up, XLU Utilities. A lot of weakness beginning of the week. Strength last week while tech was lagging, and then a little bounce today right off its 50 and its 21. No utilities on the 21 over 21 list. XLV is up next. Healthcare at all-time highs. Decent relative strength, not the best, but a lot of individual names doing very well in the healthcare sector. And finally, XLY, which is dominated by Amazon. Undercut bounced at the 50, 4 days, near all-time highs. So that's the sector strength. Now let's get to the 21 over 21 list, and then we'll wrap up with some buys and sells in the portfolio for the week. So we actually have 22 on the list this week because of something I bought after hours on Thursday, and then added on Friday morning. Snapchat with just a monster earnings report and reaction. Closed the day up 24% on fantastic volume. We're going to take a look at that for a minute. We've got 8 sectors and 15 different industry groups covered in here. So let's go through the 21 over 21, and of course we'll start with Snapchat. Now these are sorted by the order in which they've been added to the list. If they're flagged, it means we own them. The 2 that came on the list, I mentioned, off of the list this week, I mentioned T-Mobile. The other one is UNH, not because it broke its 21, but because it showed absolutely no strength after its earnings report. So let's go through this candle by candle. So we had a sell-off initially on its earnings report, and then a reversal off of the 21 and the 50 toward all-time highs. Normally you expect to see some follow-through to that, but the next 2 days it did nothing. That's a digestion day on Monday, no problem there. We bought this Friday on the positive reversal, by the way. Ugly candle on Tuesday, Monday, closing at the bottom of the range, broke the 21, bounced at the 50. Not what I wanted to see. 4 so-so days to end the rest of the week, but even with the chart, with it trending higher on a relative basis, just wasn't getting the job done. So this is forming a nice cup and handle. I think there's better places. Note the volume dry up over the last 3 days too. This may bust out of here and do well, but its 4 group mates aren't doing well at all. And I'm not going to bring up the charts, but Anthem, Cigna, and Humana charts don't look good. So why would UNH stand out and buck that trend? I just think there's better places. So that's why it came off the list. So let's go with Snapchat. Here's the big volume, 654% above average. gapped out of this base. Now remember, Snapchat was one that once it broke through the 64-65 area, was on the 21-21 list a couple weeks ago, but it had these nasty 2 days that it never really could recover from. Broke the 21 rolled over, broke the 50 for a couple of days. It really wasn't showing much strength into its earnings report, but man, really did knock the cover off the ball with this earnings report, closing near the high of the range on a big gap up. And it's not like it's extended, it's just gapped out of this 104-day, 35% deep base. This has room to run, frankly, and this is a good start with this big volume 24% gainer. So we got a 4% position in that after buying 2% after hours and then adding 1% twice throughout the morning. Roku, I would like to own this. I've owned it in here, got stopped out on weakness. It went under the 21, barely reclaimed the 21. And again, this is the digital advertising following through over to this name from Snap and Twitter. But nice breakout of a cup and handle, still within the buy area. That's why it's on the list. DT, this is something that was added on Tuesday this week. As if you've been watching the Dirty 30 list, this was one of the first ones to reclaim all-time highs, and then it corrected, had 3 closes under the 21, but volume came into it on Tuesday, got back above the 21. I bought it there, and 4 nice days in a row for Dynatrace. They've got earnings next week. Visa, I mean, that just looks good. Visa bounced off the 21 and near all-time highs. Costco, this is the XLP Staples representative riding the 8 higher. This is what we're trying to capture here. When you've got a stock that primarily rides the 8 higher, maybe breaks it, bounce off the 21, gets back above the 8. We've been studying a lot of models of leading stocks, and this is the familiar face in the yearbook, so to speak, that we're looking for. Albemarle gapped out of this cup and handle, sold off for a few days, reclaimed its strength, held the 8 today. Again, this is a chemical stock, and XLB is not acting very well, but there's a big need for what they produce as far as in EV cars. Carvana, speaking of cars, used cars are outselling new cars, and nice little pullback here. Undercut, reclaim the 21 in 4 straight up days. These 4 up days, you're going to see this a lot in leading stocks. And usually you don't want to buy on the 3rd up day, but we did get a 4th up day in a lot of these. And this is just breaking out of its base. Amazon, nice breakout on big volume here. Kind of a harsh pullback, undercut the 21, but you've got the 4 up days since then. Relative strength, not the greatest on Amazon, however, but they do have earnings next week. Apple, very strong, broke out of its base a couple weeks back. 2-day pullback, 3-day pullback, bounced off the 21, near all-time highs, earnings late next week. Chipotle got stopped out of this because had no, bought it around this area and had no gain with this sell-off late last week and Monday into earnings, so we ditched it, and 3 days up 11.5% on 355% volume, and then a day 2 and day 3 higher high. I got to find a way into this when it pulls back to the 5 or the 80 MA. It's just absolutely showing superior leadership. Lululemon, speaking of showing superior leadership, up 5 days this week on this nice bounce off the 21, relative strength. The angle is what you're really looking for. PayPal, again, pulled back, bounced off the 21, 5 straight up days to new all-time highs. Avantor just keeps chugging along higher, not the strongest from a relative strength perspective, but has earnings late next week also. InMode, we own this. Nice move up here on volume, nice gentle pullback on lower volume to this 100 area and the 21 day, and then a nice close to the week. Revolve, this one is a little bit of a wild child. You can see these 3 harsh down days here, nice 2-day recovery, 2 days down here. little bounce, undercut the 21 and closed below the 21, but closed the week okay. I debated booting this off because this is just not really the action. Look at the relative strength. This is not really the action that we want or that we're seeing from a true leader. And this bounce has been on lower volume than the sell-off was. So if I had to rank these from 1 to 21, this would be ranked number 21. Viva Systems bounced right off the 21. Nice close to the week to all-time highs, just breaking out of this base. Net, again, low volume pullback, undercut, reclaimed the 21, and 5 up days. This is an example of one that really showed strength, up 3% on Monday when everything else was being sold. And that's what put in the bottom on the indexes. And this was one of the things that action in stocks like this kept us from completely clearing house in our portfolio. CrowdStrike, same situation, ugly Monday, but closed at the top of its range, right on the 21. 5 days tight on the 21, and it busted out of there on below average but higher versus recent volume. Briefly made an all-time high today, and this is just right at the top of its base breakout. So really it's gone basically sideways for 4 to 5 weeks. Definitely has room to go higher. DocuSign, one of the big strong leaders of this recent multi-week run, starting with this 6.4 massive volume, 600%, 19%, 600% volume increase, up 20% on the day. And it just continued to be accumulated, went sideways for a couple weeks, pullback, broke, bounced right off the 21, and this is another one that was exhibiting leadership that we wanted to see, and now 7 straight up days on this off of the 21. American Tower, we already took a quick look at this, just trudging higher, bouncing off the 21. Domino's Pizza, man, look at this candle. If you guessed that Domino's was going to have a 14%, almost 15% day on 400% volume on its earnings report, when its earnings growth was only up 4% and its sales growth was up 12%, I would have thought you were smoking crack. But especially with the way this pulled back going into earnings on near average volume. So this is really considered distribution, but it bounced at the 21 and then just a huge up day, giving some back on Friday. But this is, since it's number 2 on the list, that'll tell you how long it's been on the 21 over 21 list. Look how it's just ridden this. And this is the type of leadership and action that we want out of leading stocks. And number 1, Fortinet, this just continues to be a beast. Take a picture of this. If you want to refer to what does leadership look like, going all the way back to mid-March when everything was selling off, this thing only sold off in the teens, really led while other security stocks were getting bludgeoned by 30 or so percent. This one held up very well. And then this day, 326 kicked off this beautiful run here from 180 all the way up to 275, and I haven't gotten any of it. But I have in other stocks. But as far as taking a picture of what you want an easy hold and a leader to look like, this is the poster child for it. So that's going to wrap it. Wrap the 21 over 21. We'll talk about portfolio changes. We came into the week about, from a beta standpoint, just a little over 1.0. 1.0 is the least you want to be when the market is healthy. That's the equivalent of the return that you would expect out of the S&P 500, which has a beta of 1. But we had a bunch of cash coming into the week, about 39%, and we put it to work on Monday, adding DocU. But adding this as it bounced off the 21. So what we've been doing is taking a full position if we're over the 8 and the 21, a half position if we break or closed more than 2% below the 8, and then the other half, as long as we're above the 21, we're sticking with it. We get the bounce and get back above the 8, we're going to add that other half position back, and that's what we did with DocU. Not everything was golden. We did get stopped out of some SSO on Monday, but we did add QLD as tech was showing strength relative to the SSO. But we ended the day with our beta right around 1. and really didn't get sold out because of the leadership that we continued to see in the leading stocks. So Tuesday morning added SSO back, half of the SSO that we sold, so that got us back to a 20% size in SSO, and we added DT, which I mentioned, and also added to net under the same rules. We got stopped out on half of it with this close below the 8. 8 rolled over, bounced off the 21. We added it back, and were rewarded with the 5 nice days into the close. Wednesday added NVIDIA back after getting stopped out on this big move below the 21 last week. They did the 4-for-1 split. It held up okay, then had an inside day. Wednesday here is when we added it back when it got back above the 8 and the 21. Hasn't really set the world on fire over the last couple of days like some other ones have, but this was the original leader, and if stocks are going higher, I would expect NVIDIA to also. The question is, will it be doing double what the S&P does, because that's what we're looking for. And then I talked about how we sold UNH just because we thought there's better places to put the money. That was the sell on Thursday. We added to CrowdStrike as it got back above the 80 MA, showing some strength after hanging out here along the 21, so back to a full position in Crowd. And then after hours, bought Snap at 71, initially after the big move up, and then added twice this morning. And with the Qs being 6.7% above the 50-day moving average, we took half of our QLD off. That was like a high 7% gain in 4 days. We'll take that in an index ETF anytime. So those are the portfolio changes for the week. So we end the week with a beta about 1.35, around 20% cash, and looking to see after these 4 strong up days in leaders how we respond next week. So that's going to wrap it. As always, I'd love to hear feedback from you. I'm on Twitter at D Vandenbord, email don@revereasset.com, phone is 855-REAL-WEALTH. So what are we looking for next week? We're looking to see, again, how we react with an extended NASDAQ after 4 straight up days, 6.7% above the 50-day moving average. We've got an S&P 500 that's at all-time highs after bouncing where it needed to at the 50-day for 1, 2, 3, 4, 5, 6, 7, 8 times this year. One of these times it's going to break. We're prepared for, as always, for all outcomes, but we didn't break. We held despite a lot of bearishness, and that actually was a contrarian bullish indicator because we saw the put call spike. We saw the bull bear ratio come way down. We saw some of the contrarian signals that we needed to see to keep us in the market, and we bounced right where we needed to and then closed the week with 4 days. So let's see. Wouldn't be surprised if we work this off sideways a little bit. Really don't want to see it going straight higher because that just sets us up for harsher pullback. So that's what we're looking for on the S&P. Some strength in financials and oils would help get the Russell and the mid caps back above their 21 and their 50-day, and the Dow just keeps on trudging sideways but not showing any relative strength versus the S&P 500. So we're looking for an all-time breakout next week on that is what the bulls would want to see. So that's it. Wrapping up the week ending 7/23. This is Don Vandenbord telling it like it is. Thanks for listening and have a great weekend.